The trade of the day today is going to be Alibaba, or as my good friend Ian on our show in the midday calls it, Alibaba. But Alibaba, look, it's all about the higher time frame sometimes. And really, when you look at a key level, you got to be willing to trade it in either direction, because if it's a big price, people are going to be all over it. There's going to be good trade action around it. So I want to start things off with the daily chart. And this nice little purple line here in Alibaba, I've zoomed in on the daily here. That is your 200 period moving average. We've broken away from the 50 period. You can barely see down here below 100 bucks. But every time since that breakaway from the 200 and the reclaiming of $100, every time we've gotten to that 200 period simple moving average, hard rejection, rejection, we've just been unable to break through. Now, obviously, you've been grinding higher lows the entire way through. Of course, this sets up for a breakout trade. And we'll get to the breakout in a quick second. But the other thing I'm always going to look for, if I see a pattern of rejections as a day trader, there's going to be a short opportunity there, and it's fine. You can sit that one out because the higher risk to reward might be for the long trade, and that certainly was the case today. But I'm always going to make that play where if I can get one of my favorite entry points, which is shorting off that high at the open, giving it to that resistance level, and then seeing if we can't get a good scalp trade. I'm going to do it almost every single time as a day trader. So we did have that short off of 121. We got a nice little flush. We were able to take almost a buck on it. And we had another opportunity to get some more shares out right before the open. And that was pretty much it. There was no pop and fade at 9:30. As a matter of fact, it tried to break the high. There's your little pop right before the open. And then held a higher low. And then from that point on, it was jailbreak city. If you're going to play a level like this, there are some levels where I'm shorting in front of resistance, but I only like it in one direction. I think the stock is going to eventually fail. And there are other ones where on the daily chart, really, like I said, you were gearing up towards this breakout with the higher low. So you know you want this break. As a matter of fact, Arun was looking at the 121 as well because it was just an obvious price level to grab. We've seen what Alibaba can do when it gets momentum behind it. So we reverse from short to long, more or less right at the open. This did not take very long after all. I do scalp some out immediately. Immediately we had a wick top right up to a 122, and it was the initial break. Within seconds, I'm getting the first scalp out. Usually take that first third on the first push. That way if we go snap back down, I have a piece that I can reload here. That never happened. We pushed immediately to that 122 level, that next dollar up, so we're going to take some out there, thinking again, we should get another pullback in. And there was nothing at our re-entry price. That's how ridiculously strong this was. From that point on, this wasn't following the pattern that we've seen for a lot of breakouts for the last little bit. The reason why breaks haven't been as good this year, in addition to it being a bear market, has generally been that you're being put to the test after the breakout, either immediately or right after that first one or two pushes to the upside. So you're being tested. Do you want to reload? If you're trying to hold for the home run trade, are you sitting there being suckered as it comes back to your entry price? None of that today. It was clean to the upside. And once we cleared that 122 area, all we could do was sit out and wait for the absolute home run. Now, this is not some kind of scientific trade once we're past 120. 121. I simply go right back to the last time it failed up here. It was just shy of that 126 area, 125 and change. It's a nice even round number, that 125. It's a big psychological level. And you had the biggest candle on my 3-minute into that 125 level. So it's pretty simple. You get the big push up. It's the biggest, widest candle telling me highest probability of a pullback. A lot of times I ask myself a simple question. If I was flat and I was watching that move at the open, and I saw that same candle in front of 125 as a day trader, what would I do? I'd be thinking about 124.85, 124.80, a short at that price with a stop at 125, with a slight little pullback, looking for just VWAP. So if that's what I'm thinking, if I was flat, well, if I'm long, that's a place to take profit. We get our target, and it does that pullback into VWAP. Now I'm kicking myself for not having reversed into a short position. However, every once in a while, the market smiles on you and says, you're going to get a second chance at a level. And when you get that opportunity, you just take it. However, this was not the initial test, not going to be as clean of a trade. So I did not short it until it got past the previous high and right at that 125 mark. As tight to the top as I could, more aggressive scalping it out initially because it's a much more bullish move, wedging itself up to that 125 for a potential break. More aggressive taking it out. When it finally starts to flush, then you can start holding back in for VWAP. I was never really thinking about holding past VWAP given how strong this was. The key thing here about BABA was big, monstrous level when it finally took out that 200 period moving average. That's the catalyst for the trade, and you've got to be looking for those types of opportunities. In a bear market, that's when you get these retraces through monstrous levels, which can lead to some good breaks.